Hello, good afternoon. It's Adil bringing you a review, end of day review of the European markets from an intermarket analysis perspective. Okay, folks, so let's see exactly what happened today and the outcome, etc. I've already done a mid-afternoon update, so you already know that the Shanghai obviously finished higher along with the Hang Seng, and the only laggard or weakness really was the Nikkei, and that's primarily because of the BOJ is on tap overnight. The FTSE obviously had a stellar finish towards 6,800 level, obviously almost 1% higher, with miners and the retail sector rebounding. Miners due to China and retailers due to the potential or the probability of business rates, boosted by business rates hopes. Okay, so bricks and mortar companies boosted by the prospect of lower business rates, which could help limit the number of high street closures and help them fend off competition from online firms with lower fixed costs. Okay, so that's basically the situation there. The CAC and obviously the DAX. DAX was really the main monster today. It actually roared past the 12,200 level until it eventually sold off towards the close. So that's an interesting insight there. Okay, so the Swiss market, although the IBEX and obviously the rest of Europe really more or less higher. The Greece certainly a laggard and certainly under pressure because of the comments that are coming out now from Mr. Schauble saying that they've lost all confidence or any confidence that was there with regards to the new Greek government. So that's obviously not a good sign. Obviously, Mr. Putin going missing, he did actually emerge or re-emerge today. So that concern was certainly alleviated. That's one of the reasons why the dollar started to fall today, started to move make its way lower. Okay, so that's certainly a factor to take into consideration. Okay, so that's basically where we are. So the fundamental picture today in terms of economic data that actually moved the markets really was to do with China and obviously the stimulatory measures there. That's how helped the FTSE 100. Okay, other than that, there wasn't anything really from the UK or European perspective. The US markets, yes, we had relatively weak data in terms of industrial production and the empire manufacturing as well. Literally all the data that came out of the US today was very weak. I mean, we had the housing market weak, manufacturing was weak, industrial production weak, and empire manufacturing data weak as well. Now we still have certain concerns with regards to Ukraine, Russia, given the fact that you had the report of a nuclear strike potential for a nuclear strike. We had the RIA reporting that Putin's northern navy fleet has been mobilized or on full alert. Okay, and then we also had concerns with regards to the Bank of Spain's decision to suspend operations at Banco Madrid. So again, there are several factors here that are indicating downward pressure. And now one of the biggest concerns that I have at this current junction is the price of oil. The price of oil has actually dropped to $43. Now that's not a good sign at all. Okay, that certainly isn't a good sign, especially with regards to the FTSE 100. Now copper has obviously moved higher to 270, although it has started to move down and lower to 268, and obviously holding a resistance. And the gold price did bounce off 1150, but it still remains languishing at the lows. So commodities are certainly languishing at the lows. Now, one of the other reasons why the markets have obviously rallied today in the US is number one, which I already explained in my US market video. I mean, if you go look at my weekend analysis, I explain it in detail there because we're going to get a drop in the dollar. And obviously that's the reason why the euro did go past 1.06. Obviously the Aussie and Kiwi have rallied quite substantially, although they have stalled now from my analysis and my perspective. Either way, that was the catalyst, lower dollar, and obviously hope that Miss Yellen will, or markets have already factored in all the hawkish terminology coming out of the Fed, and now they've realised that they've actually overshot that hawkish terminology or hawkish stance, and there may well be a possibility that Miss Yellen does remove the word patient, but obviously maintains her dovish stance. So again, that's going to be one hell of a trick if you just pull that off, but we'll have to sit back and wait and see if that actually transpires. But that's the situation that we find ourselves in. Now, the factor that I didn't obviously take into account was oil prices dropping lower. I mean, as we all know, commodities work inverse to the dollar index. Now, even when the dollar index is moving lower and yet the price of oil can't rally, that's a very bearish sign. And therefore that's bearish for the FTSE 100. Okay, So at this very moment in time, the FTSE, Dow and S&P should certainly come into resistance here, and that, given the price of oil, and that should create a risk-off scenario. Okay, that's the situation that we find ourselves in from obviously a bearish perspective. Now, obviously the bullish perspective is that the euro is basically still below 1.06 as I speak, 1.0587. It did have quite a rally to up to 1.0620, although it's coming off now, and it's certainly bounced off the 1.05 pivot. The German DAX, it totally ignored that, and the European markets totally ignore that. Even with the euro rally, it still managed to rally and make new highs up to 12,200, which, to be honest with you, is very, very impressive. It just shows you that it's irrelevant of what the currency is going to do. It certainly seems to be buy the dip mode in Europe, or potential shorts getting squeezed. Either way, that's the situation that we find ourselves in. Okay, right, now let's have a look at the technical picture now. The German DAX 10-minute chart, higher highs, higher lows. We have left unfilled gap behind, and there are murmurings regarding Greece, and there's a lot of uncertainty now with regards to Greece. I mean, if you just look at the latest tweets that are coming out, with regards to the European situation. Okay, so European Commission, Moscovici, France faces demanding milestone on budget. Obviously, that's not a good sign. European Commission, Germany needs to do more now to support demand. ECB takes Euro area decision with its mandate. Again, putting pressure on France. Okay. Okay, so Germany Schäuble, no one he talks to sees how Greek approach can work. No foreign investor wanted to buy Greek T-bills. Obviously, again, all negative. Options remain on table to ease Greek debt burden. He wants Euro area to remain intact. Obviously, he would say that. Okay, Euro area must respect dignity of Greece. Greece must respect commitments to Euro area. So it sounds like they're back at square one. Greek people face tremendous difficulties. Greece faces kind of humanitarian crisis. That's not exactly bullish, is it? Okay, he has redlining talks on UK and EU. Okay, he can't imagine EU without UK as a member, etc. Germany, Schäuble, Greek T-bill auction destroyed confidence. Okay, that's not exactly a bullish comments coming out from an EU official. Okay, so Greece won't get more war reparations again. That's the ongoing spat between them two. He doubts Greece will end shipping tax breaks. Greece lived above its means. So again, undermining Greece's ability to obviously overhaul its fiscal mess. Okay, either way, these are not good signs. Reading between the lines, it's a risk-off scenario. Therefore, expect that accordingly. Okay. Understood. Okay, so that's the situation that we are in. So again, this has had quite a stellar rally. We've moved above pivot R3, so it's very unlikely for a market to move that substantially. Obviously quite an overbought condition, shall we say. 60-minute chart, obviously higher highs and higher lows. Daily chart, we're back in. I mean, we're literally in uncharted territory. Literally, I mean, how far can I go back? I mean, you can go back to 1976, and the DAX was trading at what, 0, 90, 100, 1,000. Now we're at almost 12,000, etc., etc. So it certainly is uncharted territory, and the price action certainly has to be respected. You can't go against that. It's very hard to. Okay, that's basically where we are. But remember, unfilled gap below. That's the important aspect from that, from my understanding or from my viewing, especially when you have negative Greece commentary. Okay. The French CAC at the moment certainly seems to be lagging the DAX again. Daily chart, as we all know, 60-minute chart certainly. Obviously held pivot R3 resistance, and the 10-minute chart, obviously you've got an unfilled gap below at 5010. Again, that certainly seems vulnerable to a potential breakdown lower, especially given the fact that it's held pivot R3 resistance. Okay, now the Euro stocks. Okay, Euro stocks again, we did go above R3 resistance, so slightly more bullish. Daily chart, one can't argue or falter that at all. It's very hard. Obviously the bull flag certainly played out. The R3 resistance, obviously the market has extended, so again, from my perspective, it's severely overbought territory and is actually calling for a pullback, especially given the fact that you have an unfilled gap below. Okay, so again, that's not exactly a bullish signal. Okay, so the FTSE 100, the all share index is the one I'm concerned about, because you didn't have a follow through today, so that's generally a warning sign earlier on. Okay, So bear that in mind with regards to the FTSE 250. Again, potential bear flags scenario situation, either we test double top or triple top if that obviously fails. The volatility index is still set to potentially move higher. You have a nice inside bar and bullish engulfing, therefore the FTSE 100 is expected to go lower, and you have this HNS formation now on the FTSE 350, therefore expecting the FTSE 100 to go lower. Okay, like I said, oil price has broken below the key $44 level. That's a negative sign. Okay, and that means that oil is going to break lower. If that's the case and we fail to hold double bottom, then you know exactly what's going to happen with the FTSE 100 next. So again, that's an early warning sign. Now the FTSE 100, as we can all see here, has come into potential resistance on the 60-minute chart and pivot R3 resistance. If you go to our 60-minute chart, we obviously have rallied or retraced back. How far we go is going to be debatable, and certainly is going to move the markets either way. Okay. And 10-minute chart, again, 60-minute chart, like I said, we're into horizontal resistance. 10-minute chart we've already observed, and daily chart clearly shows a bear flag formation. So that's basically where we are. We're consolidating inside bar so far in the lower 50%, and obviously now we're looking for a potential thrust lower to test that key 6650 level. So that's an interesting perspective again with regards to the FTSE 100. Okay, folks, so I think that wraps it up. Risk on, risk off, wax on, wax off. Goodbye now.